Carnival Corp., NYSE, CCL, has reported the adjusted earnings per share of 38 cents in the first quarter 2017, beating the analysts' estimates for the adjusted earnings per share of 35 cents. The C. Company had reported the adjusted revenue growth of 3.8% to $3.79 billion in the first quarter 2017, beating the analysts' estimates for revenue of $3.78 billion. The cruise operators and travel companies have benefited as consumers increasingly spend more on travel, fine dining and big-ticket items rather than on apparel and accessories. CCL, which operates the Costa and Princess Cruise lines, had hiked the ticket prices last year in response to growing demand for cruises to Alaska and the Caribbean. CCL has reported in the first quarter of 2017, the net income of $352 million Fr. $142 million a year earlier. Overall, the increased demand, particularly for the core Caribbean itineraries, has led to higher year-over-year ticket prices which had enabled the company to overcome the significant negative impact of both fuel and currency to exceed the high end of the guidance range. CCL expects the full-year 2017 net revenue yields in constant currency to be up approximately 3% compared to the prior year, which is better than December guidance of up approximately 2.5%. CCL continues to expect full-year net cruise costs excluding fuel per ALBD in constant currency to be up approximately 1% compared to the prior year. The changes in fuel prices, including realized fuel derivatives, and currency exchange rates compared to the prior year are expected to decrease earnings by 35 cents per share. As a result, CCL expects the full-year 2017 adjusted earnings per share to be in the range of $3.50 to $3.70 compared to December guidance of $3.30 to $3.60. In 2016 adjusted earnings per share of $3.45. Moreover, the cumulative advance bookings for the remainder of 2017 are well ahead of the prior year at considerably higher prices, and during the first quarter, both booking volumes and pricing for the remainder of 2017 have been running ahead of last year. Meanwhile, Josh Weinstein, corporate treasurer of Carnival Corp. and plc, will become president of Carnival UK following the planned departure of current CEO David Noyes in July after 6 years in the business. CCL stock has risen 20.34% in a year. Source: Google Finance. According to TPRON.ks.com, 4 analysts has covered the stock while recommend a strong buy. CCL has an average price target of $65.33, which is a further upside of 10.97%.